So this is weekly commentary 11, and this one's going to be special because up until now we've had weekly high in target for the DXY, and it was this wick here. And what happened? We've now traded above it. This is a monthly chart that I'm looking at, right? Now, once we've traded above a significant high, right, we have to consider two things. One, is it a false break of the high? Or two, is this an expansionary move up? So what do we have to do? We have to consult the higher time frame and we have to approach this like a science. So let me show you guys how I approach this like a science. So we're on the monthly, right? And when we're on the monthly, let's look very back. We traded from here, right? And this is a market maker sell model. From here, this expansion, move higher, reaccumulation, move higher, reaccumulation, move higher, one last reaccumulation. This is called a smart money reversal, and then we traded out. Now, where did we trade to when we traded from above here, right? And this is how I take it. I want to take you guys step by step on how to identify institutional order flow. What was below all these lows? Below this area right here, what was there? Sell stops. There is a bunch of willing sellers above this, below this area within the marketplace. Now, what do? We traded underneath it. You see how we moved quickly underneath it and then we quickly moved away from it. Now, when we done that, we were accumulating orders, right? We've been in a range here for years. We were in a range here. When we break this high, what is that? Remember this high, this lower low, this higher high? What is this candle? And what is that? That's a market structure shift. That is a market structure shift, right? Let's get some tools out. So this is your breaker block, right? High, lower low. When we trade it back above this, this becomes a breaker block. We trade above it here. Now we trade into it there. But Omar, this is from nearly like 10 years ago. I'm completely aware of that. But I don't care about the time frame. I don't. This is a reference point in price, right? Years after, it doesn't matter. It's a 3 month chart. That's fine, right? Now, let's go a step further. When we move here, right? When we move up here, this look at this energetic move, right? Look at this energetic move, breaking the high. That's the market structure shift. Now, when we do that, right, we come back and we're ranging. Let's dissect this range a bit further. Sorry, I don't have my mouse. I'm using the Mac touchpad. It's very different to me from using a mouse. Let's go PDA. And let's go back onto it. Sweet. 1, 2, 3. Right? When we have three consecutive up candles, we can view it as one large consecutive up candle if we went on a 9 month time frame, for example. Now, look at this, right? This is a reference to the newest lesson I taught you. From this move higher, there was a fair value gap created, right? There's only upwards movement within this price leg up. So what do? We trade back into a 50% of this energetic move because it's just one way. It's not institutional order flow where it's offering higher prices, retracing, higher prices, retracing. It's just one move. So we expect this to get traded back into. Now, consider the fair value gaps, right? We traded all into this and we filled this candle roughly to 50% of it. But to look at it as one price range, these three candles, the wick goes just below the 50, doesn't stay there for long though. Why? Because it offered a discount. It offers a discount, and price does not stay in discount areas for long if prices are presupposed to go higher. Fine. Now, from rejecting off of this area, we then move higher. We don't break the high, so we're still in the range. And then we come back down. Down into where? What's this? Right? This candle? What's this candle that I taught you guys? Before I say it, I want you guys to just have it in your head. What is this price rate that I taught you guys? It's a rejection block. Right? It's a rejection block. Price trades into the rejection block being the wick of this candle and an energetic move higher. When we see a range and when we exit the range, right? No. Bear with me. Just have to do the inverse of the fib. When we have a range bound consolidation and it's moving clearly like in a rectangle, right? So you see this is moving in like a box, right? Price usually does a measured move of this consolidation. The measured move we like to measure it in is one deviation of the range, which is up here, 120 on the DXY OMA. It's a monthly chart, 3-month chart. This is by no means short term. By no means do I expect this to happen even within this year, right? Let's consider the run on this high and the run on this high, just barely, right? I want to remove this just to clean up the chart. In here, we have fair value gap and we have this order block. Price is seeking higher prices clearly, an energetic move up, consolidating, no signs of a reversal, right? This high, this low was kept intact. If this was a true reversal from this zone, this low would have been attacked. However, what was being attacked? Buy side liquidity. Now, when we want to see a run on the high, we want to see an energetic move run on the high, right? It's barely, this is classed as a resistance to classical retail traders. They see this as a significant resistance because it's also on a 3-month chart. And the way the textbooks teach you is the higher the time frame, the more reliable the support, the resistance is. I want to see an energetic move above this high, right? The long term, I'm bullish. For the dollar, I'm bullish. There's no reason for me to be bearish, right? Now, the considerations for any retracement offered, there's this, right? This mitigation block and this candle's fair value gap. There's still 2 months of trading left on the 3-month. Now let's go down into the 1-month. And the 3-month is only available if you are on the TradingView Premium. That's daily. Now let's go into the 1 month. This high, this high of this month is coming in at 928, and the high of here, yeah, so 928, the high, and this high is 928. They are exactly equal. Oh no, it's not changing. I'm not sure why it's not changing. Okay, the high roughly for here, let's just say it's, so this high is 928 and this high it's 878. So it's run it by just extremely shallow run. I want to see it energetically take it out, right? Otherwise, it's still range bound. Now, back on the monthly, think of it. Where is the likely retracements likely to happen? From here, right? This is all mitigation, right? There's a fair value gap created from this close to the wick of this previous candle to have it marked out, and you want to see where in the fair value gap it can find a quote unquote support. Doesn't have to fill in the whole fair value gap. Remember, just 50% is fine. Now, the question you guys are all waiting for, the question that's flooding my DMs, where do I expect the DXY to trade to next week? Me personally, I want to see another move higher. Now, let's frame it with reference to the news. We're going back to basics. Monday, in the New York session, there's a red folder. The PMI, Tuesday, job openings, Wednesday, NFP, the ADP NFP, and FOMC. Don't trade these. Don't even stand in the way of these, right? Thursday is pound. Friday is going to be the NFP. Now, let's frame it with this week. The state that we're in with the DXY, with the week coming, this is significant. Think about it. We have moved into a extreme premium, right? We're just at, we're literally at the top of old highs back here. We've traded above this one. We're above old highs here. With all the news happening, I want to see the move higher. Now, Monday is going to tell a story. If Monday is a tight range, right? If Monday is a small range, if the daily range of Monday is consolidating for the most part, when you look at Monday and you see there's no trend, it's just sideways, it could show potential reversal. Now, if Monday, right? This is why you let Monday pass. If Monday has a large move, so if Monday moves large quickly above, then it's forecasting likely bearishness. If the first energetic move on Monday is upwards, it's likely that it's going to price in the high of the week. Now, consider all the news events happening. There is a model called Seek and Destroy, where the entire week up until the last 2 days of the week or the last day of the week is held in a consolidation, and then there's a false move and a real move. So kind of like a power of three from from the last weekly commentary, but just on a weekly basis. You know how the power of three can happen on any time frame? The seek and destroy model, the best way I can explain it to you guys in a weekly commentary is, think of an accumulation, manipulation, distribution on a weekly basis throughout the days. Monday, Tuesday, Wednesday being accumulation. Thursday could be the manipulation. Friday, distribution. that is not a trading environment you want to be kept in, right? Seek and destroy is a very devastating model, and I'll show you an example of seek and destroy on like a weekly time frame, or daily time frame on Euro actually. What was it, DXY? Okay, so you see like here, how all of this, look at this range, right? This range, all of it, the manipulative move, right? Both ways. And look, they don't, the whole reason why it's called seek and destroy, it does not let anyone be profitable within the market. Buyers, sellers, every stop loss possible here was hit. Before this move, if you think about it, if you're trading off the daily, large institutions, right? Buyers were tagged in, sellers, their stop losses were tagged. Sellers, whilst their stop losses were tagged, sellers induced into the market, then take it higher, their stop losses were tagged, and then do the real move. So you take out both parties. That's the seek and destroy model. That's something you can expect when you have all this narrative with the DXY. You're at the top of a premium, right? You're at the top of a premium with the news events happening. There's 4 significant news events this week for the USD. Monday, Tuesday, Wednesday, Friday. This is how you start to frame the possibilities of what can happen in the week. Remember the scientific approach. You want to consider everything before having your conviction on the market. Now let's go to the let's go to the daily chart. The daily chart. Go back onto full screen mode. On the daily chart, this entire week was up, bar the Friday. But what did the Friday do? The Friday, this is called institutional order flow entry drill. Previous daily low with the fair value gap. Previous daily low was run out. This fair value gap from this candle's wick to this candle's close, some of it was traded into and we rejected off higher. Well, we didn't reject off higher, we rejected off of it. We did not close below the previous daily low. What does that tell me? This indicates to me higher pricing. And it falls back onto the fact of the point I'm making. I want to see an energetic move, right? 105, I mean 104.5 is nice to me. 105 is what I am expecting for the DXY. Not short term. It's not. It's not going to happen in maybe a week. It could happen in a month or two, right? But remember, there is 1 month left of this quarter until June starts. May has now started. The day that this weekly commentary is dropping is May the 1st, right? Go back onto the 1 month. Now I'm going to introduce you to intermarket analysis. Let's go back to chapter 1. So the DXY is traded just is trading at this high. We can call this a resistance. Now, let's go to our good friend, the US 10-year. If the US 10-year is reaching for a liquidity pool, which liquidity pool is it reaching for? This buy side liquidity. We have to consider this rejection block and the order block. We have to consider those things. But right now, what is the US 10-year reaching for? Buy side liquidity, in my opinion, right? It's clearly reaching for a high. There was this high, we traded below, right? We rebalanced this area and we just send it higher. Sure, we might have a smaller retracement, but this high is in the target. It's locked onto this high. This high, I'm convict. I have conviction that this high will be taken out. Of course, I don't know when. I can't tell you guys the when. I don't want to put a time on it, but I'm anticipating this high to be run. Now, if we are seeing the run on this high on the US 10-year, let's talk about some macroeconomics. What is the Fed trying to do? Are they hiking interest rates or lowering interest rates? They've already printed too much money. They are looking to hike interest rates. Hiking the interest rates, this will send this up. And all of this hawkishness for interest rates is the driving factor for sending the DXY higher, right? Now, let's compare the two, right? The DXY is at the highs, right? Traded just shallow few pips above it. The US 10-year is on its way. So if the US 10-year runs this high, where's the DXY running? It's gonna smash through this. It will smash through that. The question is to where? My answer to that, I want to see this rebalanced, right? The same way, remember, the same way how we were slowly attacking this price range. I want to attack this price range. The higher time frames, that is the compass for the market, right? If you're going to 6 month, let's see a 6 month. Same thing. This high, we broke this high. There is a small fair value gap here, this wick to this wick. Also from this candle, there is a fair value gap. We've traded a small bit into it. However, the fair value gap close will be at this candle's wick here, and there's still space there. And what is that? 105.251. I personally want to see 105 be traded to. And now here comes the part where you guys are probably not gonna like. Let the market show its hands. If you do not know what's going on, because we are in a deep premium, we have to consider the retracement. When we attack a high, we like to come lower to reaccumulate orders. I'm not saying the trend's finished. We accept the fact of retracements. We accept the fact of reaccumulations. But where we want to see the market go long term, that's what we got to consider. Because you don't want to be high and then attack this low and this low like a support resistance. They don't even consider the internal ranges. They just go from high to low, high to low. We don't do that, right? We like to split ranges. So if we split this to here, we see there is a fair retracement can come to the equilibrium of this price range, and it lands up nicely with the fair value gap of this candle and this candle, and then we can reaccumulate and send it higher. Let's see where Monday goes. I will update you guys also. I'll try to update you guys on the Monday. It will be hard for me. It's going to be Eid and we celebrate. On the Tuesday, I'll try to update you, maybe not in a video, but in the format of a message. Monday's trading, guys, will tell the story. If anything, this week will tell the story, right? If you're unsure, let the week pass. But the week, what about the trading? You don't need to trade every day. You don't need to trade every week. Because if we see this weekly candle, we want to see what the next weekly candle is likely to do. Is the weekly candle going to rebalance early but by Wednesday, have we rebalanced this and then Thursday and Friday we move higher? If so, if that's the case, then what's the week after that going to do? Likely to move higher after, right? Because this week could be used as a rebalance. These are all things you have to consider. It's about collecting data, letting the market show its hands, forming a scientific approach to the market, and then enter when you have conviction, when you are sure, right? Now, let's consider the DXY in terms of the euro and the pound. So these are all-time lows for the euro. This low taken out, we traded into the rejection block. This low, in my opinion, is insights for the pound. Again, we're trading lower. These. I want to see this low get attacked. This low, we're not going to get there anytime soon, in my opinion. I want to see this candle's low get attacked, making its way to this candle's low. This is the low of the range. You see how, let me tell you how to find a swing low. Yeah, this candle is the low of this candle higher, and is the low of this candle higher. If the low of the previous candle is higher and the low of the candle next to it is higher, the candle in between is the candle that has the swing low. You'll see this little, triangle formation. The same with the high, right? If you go, let's pick a nice and easy one. Let's pick this one. Is the high before it lower? And is the high after it lower? Yes. So this is where the swing high starts from, right? Anyway, I have this as my draw on liquidity for the pound, relating back to the DXY, because all these markets move in tandem together. This buy side liquidity, shallowly swept. Now, if we zoom out, right, we have this fair value gap entirely to close, which we haven't. This small movement on the monthly is significant. There's this high with the imbalance above it as well. 110, I don't have that in my target yet. I want to see the move to 105 and see how we trade into 105 before I want to start saying higher prices or lower prices. I never call tops or bottoms as well. I don't say that the dollar or anything has topped or bottomed, because it's an unhealthy habit to have, thinking you know if you call the top or the bottom. We don't try to call the tops and the bottoms. This is more of an investment mindset, right? Get as close to the top or get as close to the bottom. We like to day trade and swing trade for some of you. Me, I like to day trade. I don't need the top. I don't need the bottom. Form the top, and I'll day trade my way from the top down to the 50% of the range. That's what I'll do. I don't need that. Maybe it's an ego thing. That's fine. Learn to leave your ego at the doorstep. Now, there was a lot of high time frame breaking down in this video, but this is how you have to consult when a large target is hit. My end conclusion, I want to see higher prices on the DXY. I want to see an energetic move away from this range. I want to see these highs swept clean, not just a shallow sweep. I want to see it broken through, right? Now, pairing that with the US 10-year, if the US 10-year is seeking this buy-side liquidity, the DXY should smoke these highs. Time will tell. I could be wrong. And if I'm wrong, that's fine. I get it wrong. Trust me, I get it wrong. That's fine. Because if I get it wrong, that's fine. I know which way to go then if I'm wrong. This week, not the Monday will tell us some information about the range, but this week, right? NFP week tells you a lot about the next few weeks of trading. Is the candle, right? Let's go back to the weekly. Is the weekly candle on by Wednesday gonna fill this off in Wednesday London session, right? If Wednesday London session is just rebalancing this candle and then we move higher with the news, it's likely that we're gonna trade higher. These are all the things you guys gotta consider. Now, in terms of how price traded, I don't know what's wrong with my trade. Let me just reload this. That's a bit better. Now, high of the week was Monday, right? And I anticipated this, and I think I had a conversation, and it was with Tom, right? It was on Snapchat. And he asked me last week on the Sunday, and he had the question of mitigation and breaker block, and I showed him the example on the euro, and it was this that he asked me. So this, right? You see this failure swing, and then we broke lower. I use this as an example, right? This price range, this needs to be mitigated, and you see how we're edging up higher. And then, so the market opened up on, if I add Sunday's pricing as well. So this was the market open, right, for last week. And we had this price array, this mitigation. And I assumed that Monday was gonna, make the high of the week quickly because Friday left off trading within a price array and we traded up into this area, right? Now, then we move lower. So it's likely when you have that move lower, especially on Monday, just making a very energetic move, it's likely that it's been that the opposite end of the range has been priced in, right? Now, every single day is just a significant move lower, and you'll see it's usually in the London session, right? The London session, the high of the days form in the London session, like one here, high of the day, high of the day, high of the day, high of the day, right? Because let's go back to it, the anatomy of a candle. You have an open, high, low, and close. Essentially, the open, high, low, close here. Now, you need to make, let's say you're constructing a candle. If you're going to end the candle bearish, does it make sense for you to go put in the low of the day and then go make the high of the day and then go back and go back down to the low of the day? That's too much price movement. Remember, you have to do it methodically, right? You have to deliver price, rebalance imbalance if there's any imbalance, and make the high of the day and the low of the day. If you're gonna end it on the bearish, shouldn't you just go put in the high of the day quickly so that you have the rest of the day and you have the catalyst of the London and the New York session, right? To expand down and build the daily range. Doesn't that make more sense? That's why you'll see the phenomenon of London session pricing in the high of the day. That's my take on it, right? And the logic I provided you, it makes sense because by pricing in the high of the day early in the day, you have the rest of the day to build the bearish range. And also, it's an attack on liquidity when you place in the high of the day. Like, for example, this was a run. So I did take a trade on Friday and I was buying it. And why are you buying it? Why were you buying euro? Okay, Thursday in a bearish week like this, in a bearish environment, Thursday is likely to cap the range. Now, Friday, when it's a bearish week, usually trades back into the range. I don't mean goes and trades higher, but Thursday's price in the low of the week. So from here, Friday will usually trade upwards, consolidate, you know, chop upwards. That's why I wasn't selling Friday. Now, this was a short here. I didn't take this short. I took the long from here and I got out at this high because this was my draw on liquidity. I had this as my draw on liquidity, but it's better to be safe than sorry. So I just took it. I just, exited around, I think it was 635. Yeah, so just within this candle. So we're on 634 right now. I think I exited at 635 and I entered the trade around one something. Like I entered within when we broke this high, right? Now, knowing that Friday is going to should trade higher, right? By using, data that I'm going to provide you guys as well. You want to have, if you don't want to trade Fridays, first of all. I don't like to trade Fridays unless there's a clear setup, which there was offered here, right? Before you guys trade, everyone is looking for the order block. Everyone is looking for the breaker block, the mitigation. Everyone's looking for the entry. What you guys need to start doing, look for the draw on liquidity. My draw on liquidity was here. Then I look for the entry to attack my draw on liquidity. It's not I enter, then like, oh, where am I going to exit? No, have your draw on liquidity because this is going to save you. Because you can enter and be wrong. If your draw on liquidity is wrong and the market is moving away from it, you are not going to have an entry. You will save yourself a loss. If you enter, then look for the target, but your draw on liquidity once you've entered is wrong. That trade that you're already in is likely to collapse in a stop loss. Do you see what I'm saying? Now, a lot of people ask me, why does Friday, you know, why wasn't Friday going down as well? This is the reason. When Thursday is likely to cap the range. In saying that, Friday cannot go lower. Friday does not usually add to the weekly expansion of the weekly candle. If you see this as a weekly candle, this is the weekly candle that I'm drawing out, yeah? So it closed here, and the wick of this candle is like this. Thursday makes this, and Friday trades back within it. So if you see it like here, the market opened up here, we traded lower, made the low of the week, the low of the candle was made in the Thursday. We assume we don't like to trade Friday, but just for analyzing the market, we suppose that Friday will trade back within the range, unless there is significant news. And I like to say that you should expect a range expansion on Friday on the NFP event. That's usually when from my analysis, my data collection, we see a expansionary move on Friday, adding to the weekly expansion. Other than that, if there is no catalyst for driving price lower on the Friday, we assume that Friday will trade back within the weekly range, not adding to the weekly expansion. Something for your notes so that you don't get caught offside on the Friday. The DXY, if you look on the hourly, let's go to the 4 hour. If we go to the 4 hour, right, we have perfectly balanced, not perfectly, but we've balanced majority of this fair value gap that was left with this one-sided candle. You see how this candle didn't even offer wicks, right? That's a void. That is a void. It's not offering anything other than buying. There's not even no wicks. Look, the open is equal. Okay, the open and the low is a bit different for some reason. Okay, there is the tiniest of wicks. Still, this is pure one-side buying, right? We come and rebalance it and we shoot up higher. and then we're coming back and we're trading off. This candle, don't be fooled by this candle having no top wick. It's the market's closed, right? And we want to see when the next candle's closing. Let's go to the daily of the DXY just to finish. If the market has truly topped here, we should see the move back down, right? If this is a swing high, then we want to see the move back to the 50%. And guess what? Guess what? If my bias is wrong, right? If my bias is wrong that this weekly candle isn't going to trade higher above the previous weekly candle, that's fine. We know where to expect the retracement to. We want to see it move back within 50% of the range. And if we get into 50% of the range, guess what? On the daily time frame, if we're moving back to 50% of the range, we can be intraday short selling until 50% of the range. Do you see why it's so important to have the 50% of the range drawn out? Because if you didn't consider this and you're seeing this as the draw, right? Which it can be, because if we're offering lower, deeper into the discount, but you have to accept the fact that there is a possible rejection at the 50%. You don't say, but what if it goes down here, I'll make a more profit? Well, what if it doesn't? Think of the worst case scenario. What if it doesn't, right? If our bias is wrong, then we expect the retracement down here and we can short sell to the 50%, at least the 50%, right? Fill in this fair value gap, and we want to monitor price movement here. But other than that, to end the video, let's go back to the weekly. I want to see the energetic move higher above all of this. I don't consider this a turtle suit. With if it was, a clear rejection, like a very significant, you know, attack down on this candle, I would consider that a turtle soup. However, the candle has held strong and is holding above highs, right? Let this week tell the story. NFP week, reduce the risk if you're trading this week. Plenty of news. Manipulation is bound to happen, right? This video is a long video. I'm not sure how long this is. Maybe, what's the time now? This video is probably 40 minutes long, maybe 50 minutes long. But there is plenty in here, right? So, until the next time, quick update actually. This week will be busy for me. I hope you guys understand. I try my best with this mentorship. I'm usually always on time. If I don't upload on the day, I'll upload the next day. And usually it's because if there's this actual problem. Out of laziness, it's never been out of laziness. The last time it was the space that I showed you guys. I ran out of space. But anyway, this week might be a bit busy for me. So be a bit forgiving and understandable if I'm slower with the replies, especially on Monday. If you don't get a reply, don't think that it's because I'm airing you or something. Eid is a busy day for me, right? If you don't know what Eid is, it's a holy day for Muslims. You know, we have two in a year. This one is the one after we're fasting. Anyway, it's just an important day for me. So I'm gonna make that Word document for you guys. I'm gonna try and start working on it ASAP from Tuesday, and I'm gonna try and smash through it. As soon as I get that done, we will commence with chapter 3. If the Word document is taking long, I will start chapter 3 and I will still make that Word document until that Word document is finished. Even if we're going through chapter 3, I'll put that Word document into chapter 2. Like that, I'll put that Word document in chapter 3. That chapter 2 Word document, it will be made, right? Just wait on me because I want to make it good. I want to make it so that you guys don't have questions. And the last thing I want to tell you guys, please, please, try your best in understanding the lessons before coming to me. Oh, sorry about that. Try your best to learn from the lessons before coming to me. A lot of you guys are asking me stuff from chapter 1 with bias. Can you help me in my weekly bias? I've told you guys, and I've given you guys the best homework to get better at it. Start journaling your predictions for every day and every weekly candle. And over time, if you get it wrong and you reflect upon it and you see where you go wrong, right? Because if you see where you go wrong and you do it the next time, you're likely to not make that same mistake again. And it's just about making all the mistakes, and then reflecting upon all the mistakes until you become have a very high success rate in predicting the next daily, you know, the daily close, or not where the day actually closes, but the bullish day in itself, the bearish day in itself, and the weekly, the bearish week and bullish week in itself. That's the only way to do it. There's no cheating it, right? So consider that, right? I'll always help you guys, but do yourself the justice of having a fair go before coming to me, because you're cheating yourself out of a learning curve. Because one day, if you guys leave this mentorship and you were relying on me in the entire mentorship and you went independent, then you're just going to come back to me for help. And that's not what we want. It's about becoming independent, right? It's about becoming self-sufficient. So take that on board. I'll see you guys next week, hopefully. Take care.